Hello guys, welcome to RBI Academy. So we are going to talk about today our new part in your pension sector, where we are going to cover Employees Provident Fund Organization. Okay, so think of it as a 3-in-1 social security system. So you may purchase some kind of social security schemes, right? So here they tell you na that we have some kind of 2+1 features or 3+1 features. So consider it as a 3+1 features. Okay, now we are saying that the easiest way to remember the EPFO is simply EPF, EPS and EDLI. Now you may think that what is EPFO? See, it is a retirement corpus. What it is? Retirement corpus. And EPS is your pension. Also EDLI is what? Of course the linked basically insurance. Okay, so the insurance that you get from here. Fine, understood this much? So here you will see that what is exactly EPFO? Employers Provident Fund Organization. So basically it is a statutory organization that comes under which particular ministry? Ministry of Labor and Employment. So it administers the Employees Provident Fund and other social security schemes, and it is designed to provide financial security and stability for employees across the India. So basically we are saying that its basic purpose is to provide social security to employees through 3 schemes. So EPF, that is your retirement savings, where the corpus is accumulated with interest. Then EPS is your pension, which provides you the pension benefits once you get retired, and EDLI, that is life insurance, where you are basically your family is getting benefit if the member dies while covered. Okay, understood? So now we are going to talk about this particular scheme, taking an example of Mr. Rahul. Fine. So here we are saying that our Mr. Rahul has joined a company where his basic salary along with his DA is equal to 30k rupees, right? So he is earning 30,000 rupees. For simplicity, let us understand the contribution mechanism using the statutory contribution structure, where you will see that employee will be contributing 12% of this particular 30,000 rupees, right? What is 12% of 30,000? That is 3,600 rupees. Fine. This 3,600 will go where? It will be an employee's contribution, and there will be an employer's contribution as well. That will also be your 12% of 30,000, that is 3,600 rupees. So the total amount will be how much? Tell me. It will be 7,200, right? So here we are saying that the employer's entire 3,600 does not simply go into the Rahul's EPF account, rather it is divided between EPF and EPS. Okay, so subject to the applicable wage ceiling and rules. So employer's 3,600 is basically divided into 8.33%. okay, which 8.33% will go towards what? EPS, and remaining amount will go towards what? EPFO. So here we are saying that out of 3,600, EPS will be having, that is the pension fund will be having 8.33%, and balance will go towards the EPFO. So this is one of the most important concepts that you are going to study. Now, so what are the key functions when we talk about managing the EPF, right? So here you will see collective contributions, invest funds, provide benefits. So what are we saying? See, here you have to understand that in EPF we are getting the contribution from whom? Employee and employer, right? So systematically we are collecting the mandated financial contribution from both employers and employees to build the fund. Then we have to invest the collected corpus into permitted instruments to generate stable and long-term returns. Okay, we have to make sure that we generate the returns, as these are going to be used for the pension payments to the people, right? Disbursing accumulated retirement benefits to eligible members upon superannuation or specific milestones, right? So now we are going to talk about your other schemes under this. So employers pension scheme, right? So it provides a defined pension benefit to employees after retirement, ensuring a steady stream of income post employment. Now, other one is employees deposit linked insurance, where it offers life insurance coverage to EPF members, providing financial assurance to the employee's family in case of untimely demise. So what we are talking here? See, we are saying that finally we have what? We have our EPF and EPS, and in this we have two schemes, right? So in the first scheme, let's talk about which one you want to talk about. Let's start with EDLI, right? So here, suppose, what is the full form of this particular scheme? Employees Deposit Linked Insurance, meaning insurance benefit, right? We are getting insurance benefit. And what kind of insurance benefit are we going to have receive here? So here we are talking about employees Provident Fund membership deposit, right? So employees Provident membership fund or deposit, which are the insurance benefits are linked to this particular fund. Now suppose there is Mr. ABC who died while he was covered. Now his family is going to receive an EDLI benefit subject to the scheme's condition and calculation. So let us say that Mr. ABC has find three options here, or better say three benefits. First of all, he had EPF where his accumulated corpus was there. The accumulated corpus, right? Accumulated corpus. This for yeah, accumulated corpus. Fine. Another part is what? EPS, eligible survivor pension. So here we are talking about pension, and then we are going to talk about what? Then we are going to talk about your EDLI, which talks about insurance benefits, right? So you understood this? What is EPFO and what is EPS? You know that. See, EPF is about accumulating the amount and EPS is about distributing the amount monthly or whatever periodically you have decided. Basically it is monthly, right? Understood? Now, it ensures lifelong financial support through monthly pension payouts for retired members and their dependents. So what we are doing here, we are providing some social security benefits in the form of pension, right? Then here we are also allowing partial or full withdrawal for critical life cycle events like retirement, medical emergency or housing. So they keep changing about all those things, right? That how much amount you can withdraw, and there are certain conditions but that are not the part of your syllabus, so you do not need to remember this. Just remember that, okay, we can here have some partial withdrawals as well as, okay. So even for the marriage also they are providing such kind of loans and everything, or the partial withdrawals, okay. So insurance cover, it guarantees financial protection and insurance cover in an unfortunate event or of a death or permanent disability, okay. So what are the key features of EPFO? First of all, it is a dual action structure where employer and employee contribute a defined matching portion of employee's basic salary to the EPF account every month. So here what we are doing, we are providing the amount every month, right? So here you will see that employer and employee both are going with what? Both are providing a equal amount of contribution. Fine. Here they are also saying that there are multiple tax benefits, especially under the section 80C. So these tax benefits are also important to know. See here we had a old regime, right, and new regime of tax we have as of now. So talking about this tax benefit, we are saying that, let us say that a PC earns some salary, he contributes to EPF. His contribution can provide tax benefits subject to the applicable income tax provisions and limit, and the accumulated money can enjoy favorable tax treatment when withdrawn, provided the relevant conditions are satisfied, okay. Next, long-term savings as well as social security. So what do we talk about long-term savings? So see here we are saying that, okay, we have an accumulated portion of amount, right, fundamentally designed to encourage and enforce disciplined long-term saving habits to build a robust financial corpus for retirement. It acts as a critical social security net, offering immediate financial relief to employees in devastating scenarios like job loss, disability or death, okay. So here we are talking about the social security benefits, we are talking about EPFO amount, right. So basically offering immediate financial relief. So what are the benefits of EPFO? First of all, power of compounding ensures that monthly contribution grow into a highly significant financial corpus ready for the employee at a retirement age. Also, it directly reduces the individual's annual taxable income, helping members achieve substantial tax savings over their entire career trajectory, right? So here there are multiple benefits. First of all, we are saying that here EPS rules were amended to allow withdrawal benefits based on the shorter contribution period. Then we said that okay, fine, here we are also having other benefits for this particular EPF, where we are having retirement savings, we are getting tax benefits, then we are also having a social security net, ease of access, and then let us talk about current status of EPFO. So as of now, they are providing an interest rate of 8.25% EPF interest rate, okay. Then we are also talking about 28.3 lakh crore consolidated corpus had exceeded basically the amount everybody has been contributing into this EPF, right? So now we have a corpus of 28.3 lakh crore. Right, this is huge. So this is not an individual's corpus, of course it cannot be possible, right? So it is about the complete accumulated fund. Next, operational reform. See here they have brought a centralized pension payment system. Now what is this CPPS? See, earlier pension payment could involve dependency on particular bank or branch arrangements. Now under this particular system, pensioners can draw pension from any bank or any branch across India, okay. Now facial authentication technology. So here we are talking about what? We are saying that fine, here under this particular system, suppose that Ramesh retires in Delhi. Now his pension arrangements are established, later he moves permanently to Bangalore, he can withdraw the amount from there. Then we are talking about here face authentication, where submission of the digital life certificate can be done by leveraging facial authentication technology, removing the need for physical biometric visits. So a pensioner traditionally had to establish that they are still alive to continue receiving pension. Now this is done through their digital life certificate. So EPFO has enabled submission using facial authentication technology. For example, there is a 80-year-old pensioner. Instead of repeatedly traveling to an office or bank just to prove that yes, I am alive, digital processes are making the verification easier. So facial authentication technology, that is digital life certificate. Fine. Next, enhance the scheme benefits. So what does this enhanced scheme benefits talk about? Here we are saying that just remember, the withdrawal benefit is accessible and available for members even with a minimal 1 month of contribution, vastly increasing the scheme utility. So see here what is happening, we are saying that okay, here the withdrawal benefit is also based on shorter contribution period rather than requiring the old long minimum contribution period for that particular benefit. For example, A works for in an EPFO covered establishment for a short period. Now here you will see that basically they can even after 1 month of service can withdraw the amount. EDLI benefit enhancement. So maximum insurance coverage under the EDLI scheme has been significantly enhanced to a range of 2.5 lakh to 7 lakh rupees. Now unprecedented service delivery. What happens here? So we are having a staggering 2.1 crore auto claims in financial year 24-25, a massive leap from 89.52 lakh in financial year 23-24. They are successfully redressing 17.33 lakh member grievance over the year, attended 39.74 lakh support calls in the year, reviewed by 239th CBT meeting. So we are saying that okay, the service deliveries are also improving every time. Okay, do you know about EPFO 3.0, where we are talking about making the EPFO more digital, automated, faster and easier? So basically we are bringing digital services, automated processing, simplified claims, better member experience. Now global and digital reach. So international coverage. India has actively signed 22 bilateral social security agreements, including a pivotal one with the UK protecting the rights of international workers. So digital push. EPFO 3.0. Aggressive rollout of EPFO 3.0 reforms aimed at enabling ATM UPI based withdrawals and further end-to-end digitization of member services. Now let's talk about EPF and Miscellaneous Provision Act. So what is this particular act to? See, here we are talking about other important things. Okay, this is also very important for you from your exam perspective. So think of this act as the legal foundation behind EPF, EPS, right? So here what we are saying, that an act to provide for the establishment of provident funds, pension funds, deposit linked insurance fund for employees in factories and other establishments. So right, so here you will see in the first part we have the short title and text end. So they are saying that it will be known as Employee Provident Fund and Miscellaneous Provision Act, which is applicable to whole of India, extending and applying comprehensively to the entire territory of India, right? So here you will see that the application is for what? The famous 20 employees rule. Remember this, there is a 20 employees rule. What is the 20 employees rule? See, here we are saying that this act applies when an establishment has 20 or more employees, but do not oversimplify this, okay, that every company with 20 employees automatically comes under this. For example, there is a factory where there are 25 employees, but factory is engaged in an industry that is specified in Schedule 1. So the act will be applicable, but a factory with 15 employees where basically the 20 employees threshold is not yet met, but the central government may say at there, okay, the act will be here applicable on this factory also, because here an establishment having fewer than 20 employees through notification after the prescribed notice has to come under this particular act. So 20 is the normal threshold but not an absolute barrier. Okay, understood? So here you will see it will apply to every establishment that is a factory engaged in an industry specified in Schedule 1. Also applicable to other establishment employing 20 or more persons or specific classes noted by central government. Now, micro establishments, so central government may extend the provision to establishment with fewer than 20 employees after a 2-month official gazette notification. The central government, okay, here says that CPFC may extend provisions if the employer and majority of employees agree to implement the act voluntarily. Now, an employer is a very good human. He wants that his employees must have some social security benefits, so he can also voluntarily become the part of this act if he doesn't have if he doesn't have 20 or more than 20 employees. Okay, understood? Next, continuity of applicability. So they are saying that, okay, the ones applicable, suppose there are in the first year you are having 25 employees, in the next year you have 18 employees, and the third year you have 12 employees. So the act will not automatically stop applying. Once an establishment comes under this act, it continues to remain covered even if the number of employees subsequently fall below 20. Understood? So once an FDI, always an FDI, once an act, always an actor. Anyways, section 2, definitions. So here we are talking about appropriate government as well as authorized officers. So here let us talk about any organization. Let us give the name Smart Tech Limited. Fine. Now we are saying that it has factory, workers, managers, employees, EPF, pension fund, insurance fund. Now we will identify each legal term. So let us say that the sound is basically complicated, that appropriate government. What is the appropriate government? Tell me. Central government established, owned, controlled by center, railway, major port, mine, multi-state operation, PSUs basically yours. So central government is the appropriate government for establishment. Now suppose a company has establishment in Delhi, Maharashtra, Karnataka, Gujarat and falls within the relevant category. Central government may be the appropriate government. For establishments other than the central government, let us talk about state government. So then here the state government is generally the appropriate government. Okay, understood? So central is under central control, special national sectors or multiple states. So but if there are other state establishments that are under the state, they will come under state only. Okay, state government will be the appropriate government. So here we are saying that remaining or other than these. Authorized officers. Who are these authorized officers? Now imagine EPFO has to administer the act. Who can exercise these powers? So the act defines an authorized officer. It includes officers such as Central Provident Fund Commissioner. Fine. Then we have additional Central Provident Fund Commissioner, and then again we have a deputy, and then regional provident fund commissioner and other officers authorized by the central government. So it refers to officials like central PF commissioner, additional deputy, regional or any other officer notified by the central government. Now let us talk about basic wages. So what happens here? See, this is also very important. So the Act defines basic wages broadly as the remuneration earned by an employee according to the terms of employment and paid or payable in cash. But several components are specifically excluded here also. So what constitutes the basic wages? Tell me. See, here we are saying that we are excluding things like DA, house rent allowances, overtime allowances, bonus, commission, cash value of food concession or presents or gifts. So we simply mean basic wage is equal to basic salary that you are getting. So here, because EPF contribution calculations are connected to wage base prescribed by the law rules, we are saying that imagine we have two employees, employee A and employee B. Fine. Now, as per us, basic plus relevant wage component for our employee A is 15,000 rupees, but for employee B it is 50,000 rupees. Fine. Now, the contribution calculation cannot simply be understood that take 12% of whatever number appears on the salary slip. Okay, no, we are not doing this. So what we are doing, we are taking the basic salary, not the gross salary. See, the gross salary includes your what things? So it will include your specific terms of employment, for example DA, HRA, right, and then you get many benefits other than that also. So whether they are on duty, on leave or on holidays, provided it is paid in cash. Fine. So here the gross salary is 60,000. So it does not mean that basic wages will be 60,000. It may have HRA, overtime, bonus, commission, other allowances. So some of these are excluded from the statutory definition of basic wages. Understood? So here your cash value of food concession, DA, HRA, then your overtime pay, bonus, commission, gift from the employer, all of these are excluded. Contribution and controlled industry. Now, what is contribution? See, simply the amount payable under a provident fund or insurance scheme in respect of an employee. For example, employee contribution plus employer contribution will lead to social security. Understood? Next to controlled industry. What are controlled industry? See here, a controlled industry is an industry declared by a central act to be under union government and in public interest. Fine. So here we are seeing that basically any large industry is not the only industry that will be covered under this. Okay, so any industry that has been explicitly declared by the central act to be under union control. Now, employer for a factory will be whom? Can you tell me? See, it is also very simple, easy. Basically, you will see that the person who owns the company, or who can be other person, occupier, agent managing the factory, legal representative in certain circumstances, manager specified under the relevant factories legislation. So suppose Raj owns factory, but Amit is the manager actually managing the factory. So for statutory purposes, you cannot simply assume that only Raj is the employer. Act will provide you a broader legal definition. So here we are saying that the owner, occupier, agent directly managing the company, legal representative, and then individual formally named as manager under section 7(1)(f) of the Factories Act 1948. So the person or recognized authority exercising ultimate control. If the management is formally delegated, the manager, MD or managing agent holds the title of the employer. Now let's talk about employee. So an employee, who is an employee for you? Someone who is working for the wages, right? So here you will see that employee for wages or in connection with the work of an establishment. So basically it includes certain persons engaged through contractors. So maybe here we can have direct employees as well as the contract workers, right? So here the definition expressly says that we are including only those people in the EPF Act who are working through a contractor in connection with the establishment's work subject to a statutory framework. Okay, so basically here we are not saying that all the contract workers are the part. Okay, explicitly includes person hired through the external contractors. It includes apprentices except those strictly under the Apprentice Act or standing orders of the establishment. Right now, exempted employee and exempted establishment. So here we are also talking about exempted employees and exempted establishments. So here you have to understand first of all the apprentices. So here we are basically excluding the people from the definition of employees under this act. Okay, now they are saying that we are also talking about the exempted establishment as well as your exempted employees. So this means that an employee who would otherwise be covered under the relevant scheme but has been granted exemption under section 17. Okay, so person who has not been covered. Also, exempted establishment is what? Here we are saying that any establishment that has been granted exemption under the section 17 from certain provisions of this scheme is an establishment that has been exempted. Suppose company X is covered under this particular EPF, right? Now we say that okay, it has its own provident fund arrangement that satisfies the required condition. So basically what happens now, many companies they start their own provident funds or something so that they can better serve their employees. So here we are saying that okay, this particular act is not applicable on them. Okay, now we are talking about factory. See, this is another definition that you should understand conceptually. So a factory means any premises including its pre-intents where a basically manufacturing process is carried out with or without the aid of power. Basically it can be a handloom or a power loom industry, for example, right? So here you will see that we are manufacturing without electricity or we are manufacturing using electricity, it will be known as a factory. Okay, fine. Now fund, here we are saying that fund here, what is fund? See, the actual provident fund that is established under the guidelines of the scheme. Talking about industry, they are saying that all the industries listed in schedule 1 or added through a notification under section 5. Okay, understood? So sorry, under section 4. So here there is nothing that I should teach you, you already know that. Okay, it means the provident fund established under the EPF scheme. Also insurance fund is a deposit linked to insurance fund established under section 6C2. Then we have insurance scheme. Now what is insurance scheme? See, here it also refers to employee deposit linked insurance scheme framed under the section 6C1. Fine, understood? Now we have pension fund and pension schemes as well. So here you will see manufacturer, member and occupier. So what is a manufacturer? What is a manufacturer here? Processing, see, we have to understand what is the manufacturing process first. The definition is much broader than simply making a product. It talks about making, altering, repairing, finishing, packing, oiling, washing, breaking up, demolishing or adapting. So all these come under your manufacturing process. Now talking about member, here you will see that member is equal to the member of the provident fund. Okay, that's it. There is nothing to overthink about the same. Do not overthink. Okay, just the member of the pension fund or EPF fund. Now occupier of a factory. Now who is then occupier of a factory? See, this is important. Here it doesn't mean ordinary employee, rather the person with ultimate control over the affairs of the factory. So here it is managed by agent or the agent is deemed as an occupier. So if the factory's affairs are managed by an agent, the agent can be deemed the occupier according to the statutory provisions. For example, let us say Mr. Raj owns a company or a factory but gives its complete management to an agent. So the agent may be treated as an occupier under the statutory definition. Next to pension fund, as I told you that under the pension fund we are talking about the particular EPF. Then in pension scheme we are also talking about the pension scheme framed under section 6A and prescribed. Now what is prescribed meaning? See, this is a classical legal word where whenever an act says that okay, prescribed, it simply means the prescribed by rules made under the act. Fine, understood? Now you will see recovery scheme and superannuation, where who is a recovery officer? See, now imagine that an employer does not pay the amount legally due. So EPFO needs to recover the dues, and that's where a recovery officer comes in. The act permits specified authorized officers from central or state government or board of trustees to exercise recovery powers according to the statutory framework. Then we have scheme. So here we are saying that, okay, when the act is simply saying scheme, it means employee provident fund scheme. Understood? Now, the most important part out of all those definitions is your superannuation. What do we call here? We say that, okay, here superannuation is an age in context of a pension scheme where we are talking about attaining the age of 58 years. Okay, so here we are saying that since let us say that Mr. Rahul has reached 50 years, 8 years of age, so for EPS terminology we will be thinking him as a superannuation. Okay. Then comes tribunal. So the industrial tribunal here that is explicitly established and referred to the section 7D of the act. It acts as an appellate authority for disputes. So we can simply file the appeals here. Fine. So it is what? It is industrial tribunal under section 7D. Fine, understood. So under section 1 plus section 2, here we are saying that, okay, if a company has, let us say, 30 employees and carrying out businesses on a relevant manufacturing activity, so first of all it has to file an application and the EPF Act will apply on them, and assuming the statutory coverage conditions are already satisfied. Now people here, let us say that there is an employer who has ultimate control over the establishment. Fine. Now it may have direct or in contract workers. So contract workers can also fall within the statutory definition of employees. Here we are also talking about the wages, where we are including basic wages separately from DA, HRA, overtime or bonus. So not every component is included in your basic wages. For EPF we are saying that, okay, employees become member of the Provident fund, that is EPS scheme, and here EPF scheme, and applicable employer contribution is allocated towards pension as prescribed, and this is known as EPS. For employees who are covered under the applicable insurance scheme, it will be known as EDLI, and employers count also if it falls, let us say from the 30 employees, now it is just 17 employees, then also the organization will fall under this particular act. Okay, clear? Now in the next class we are going to study about the section 5A central board and many other components of this chapter. I hope you like the chapter. If you like the video, you can press the like button. You can simply hype the videos. Also you can comment and tell me if you have to share any kind of feedback. Okay, now let's meet in our next session. Thank you so much guys. Thank you so much and have a good day ahead. Thank you. Bye bye. Take care.